three relatively easy clues this morning, and we're going to use those clues to plan our attack. First clue was the bull channel, right? And that bull channel says sell the highs of that bull channel, right? Sell those highs. And we are here right at those highs. It also says that if price came down, I'm going to buy the lows, right? So I'm prepared to buy the lows of that bull channel as well. Right now this morning, though, I'm at the highs. Second clue, inside day, outside day. Where's my previous day's range? There it is right there. There's my previous high of day. What does the previous high of day tell me? Well, first of all, if I'm above the previous highs, buyers are in charge. But if we fail up there, yep, you got it. It's going to come tumbling right back down, and I'm going to use that now as a magnet. So above the previous high of day, if we keep going, obviously, we'll keep buying pullbacks, right? I'm going to buy pullbacks above that previous high of day. However, be on the lookout for that failure. And we knew this morning because the dollar was up and down yo-yo style, we knew that the dollar might, of course, drop, push it higher, and then at those lows in the dollar, right, come off those lows in the dollar and bring the price right back down in. We also knew, because of clue number one, up at that bull channel high, sell the highs. The magnet now is the previous high of day. And we knew this morning, if we got the dollar to push up off those lows, this is going to tumble right back down for us. Second clue was the outside day. And of course, the magnet below us in this situation is what we're looking at for. All right. And then the third clue we got all the way down bottom here, momentum. Momentum is overbought. This, of course, is an 89 range chart, which means this is similar to having daily chart, right? Having overbought momentum. So on my 89 range chart, which I call my anchor chart, that's my slowest time frame, the background color is red. And when the background color is red, that means multiple time frames are also confirming they are too following momentum, but not oversold. That tells me what? That tells me get ready to sell, right? Remember, momentum is green, buy. Momentum is red, sell. So we get a big heads up from momentum indicator telling us exactly what direction we should be looking at this morning. So we know the bull channel, I'm at the highs. I know I've got the magnet of the previous high of day below me. I know I've got momentum overbought and red pointing down. I also know this morning that that dollar, right, is yo-yoing. It's going down to new lower lows. But if you remember, we were waiting for that dollar to eventually retrace off those lows. It's not going to last forever making new lower lows. And we were in a position where we wanted to be selling short at the highs of that channel, waiting for that dollar to pop right up. And that's exactly what happened. Now, one thing we did today, though, was, and we did a great job of this, guys, is we defined this AB equals CD pattern. Now, here's a great example. We'll touch on this, and we'll grab that chart in the dollar and look over the dollar. But there's an ABCD. Here's A, here's B. We then, of course, go A to B. We have our trigger zone tool for that, right? A proprietary tool for our members. That gives me C. And once I get C, now I can take this distance from A to B, and I can project that up here. So now I know where the D should be. Now I know, think about this. What is the D? Well, the D is going to be a target for a wave long. So we know up at that 760 area, that's where we expect the long-term move to get to. We also knew that then price would come tumbling back down off that high, and you're going to be selling below that 760 even. So the ABCD pattern, what did that have to do with today? Well, the bottom line is that at the end of the morning here, we of course grab our ABCD. The dollar did what, right? Dollar, of course, kept dropping. So we, end of the morning, ended up buying after we had shorted this thing. Dollar kept dropping. We ended up buying on the Russell and took it all the way up to that D. So a good example here of how the long-term move worked out. And inside of that long-term move, we were able to grab a couple short trades here in the Russell and make our money that way. All right, that dollar yo-yo is what got us going today. Let's grab a look at this here. That's the 89 range chart. Let's grab the dollar real quickly here, and let's just look at the dollar. Now, again, you can see here, we got 930 down bottom here, right? 1015, 1030 right here. Now, we had found a bear channel on my dollar. And so we were planning on using this bear channel with that dollar correlation. Remember, it's a negative correlation with the dollar. I don't trade the dollar, it's too low volume. And why can the dollar with such low volume be so important? Because the dollar is a comparison to a basket of currencies. You're not going to get a lot of volume in the dollar, but it will move a lot of things around. So my dollar, of course, now, it came down to these lows by 9:30, and then we had, right, this is a great situation here because we got short on the euro when this happened. Dollar began to retrace off these lows, right? We began calling it the little dollar that could because it kept going up a couple ticks, coming down, and it kept making higher highs and higher lows. Well, then, of course, we had a plan of attack that said once we break below this swing low, right? In other words, the dollar hasn't made a lower low in over an hour. So once we see a lower low, that's when we know, right, it's time for us to go buy now. The dollar will now start moving lower here. So we eventually see the dollar make a new lower low, and it tumbles. So what happened here was when the dollar index hits the lows of this channel, comes down, lows of the channel, we start rising now, right? So dollar index starts to rise. Rising dollar means what? Sell off on crude, Russell, gold, euro, you name it. So meanwhile, I'm at the highs of that channel on the Russell. You know I'm talking about, members. We took this together with you guys this morning. Dollar starts to rise off those lows. We're thinking, go, dollar, go, right? And so, of course, we sell the channel highs in the Russell. By 10:15, we've got our money out of the Russell short. Now, here's where we got a little bit funky here, right? It went down. It dropped. That triggered a wave long on the Russell. It went back up. That triggered the wave failure on the Russell, and then went right back down, right? And that triggered, when it dropped again, that triggered that long-term buy, right, above the channel for the ABCD pattern. All right, guys, an excellent example here. Again, how the dollar comes down, starts to rise, drops a little bit here, gets me in, gets me out, and then, of course, finishes the move, heading back down. It makes perfect sense in that channel because that's how any price would react in a channel, going from low to high and then continue to keep going lower. So there's your dollar. Got your dollar now under control. Now that you know what the dollar was doing, let's apply that now to our chart here on the Russell. And again, this dollar correlation, guys, we talk about it every day. I use a 13 range chart on the dollar. Basically, I use the same chart time frames I use for every other market on the dollar as well.